Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show, we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So we're trying to rally here. We've got a market trying to work its way higher. This week, I want to cover off the story of 30 stocks, which is obviously the Dow. And the point I want to show as we go through there is what a confusing look we've got, which is really kind of odd considering the Dow hit new highs again today. Today being Tuesday, I'm recording this on Tuesday night for presentation Wednesday morning. So the one question I have right here is the Dow the best positioned index for the next rally? And there's some reasons that I think that's true. I want to cover off some of the hurdles for that. If anybody's interested, I'm having a March Madness sale on the website. You can save $363 and get an annual membership at gregschnell.com/explore. That would put the final price at $497 instead of $860. So if that interests you at all, feel free to head over there. Again, go to gregschnell.com/explore. Okay, let's jump into the charts here. And I just want to go grab this page. And what I want to show, first of all, to start, is this is the Dow on a intraday time frame, a 60-minute, and you can see that we on Monday we made a new high, and then we pulled back and we couldn't hold it, but we were still climbing for 3 days. Then Tuesday we made a new high, 32.2, but we ended up closing unchanged. So we gave it all back, most of it in the last hour. What's really odd is when we look at the daily chart, we've got this problem with this big downtrend in momentum, and we're not breaking that. So that's a bit of a concern. And on the weekly chart, we've actually got a PPO sell signal. Our full stochastic is starting to pull back, and we're sitting here right at this 32,000 level trying to break out. But for some reason, we kind of keep struggling. So it's one of the questions I have is, why is that? And I want to show just how this looks on different indexes. So here's the NASDAQ. And on the NASDAQ 100, what we see is this 100-period moving average, again, on a 60-minute chart. But we're coming right up to this level, and this is kind of where we've been stalling on our rallies, is up against this trend line. So the real question is, can we finally break through? So on the short time frame, we've actually got a PPO, a positive cross, but we don't want to see it fail right here. And on the daily chart, this is the 50-period moving average. We do not want to kind of rise up here and then start to fail as we get going. So this is a pretty critical place on the chart. We broke down below support, and now we're back testing that support. And on the weekly chart, we've actually gone to red bars on the Alexander Elder color coding system. And the full stochastic is already below the 50 period, or below the 50% level on the full stochastic, which normally we'd like to see in bull markets. It should bounce around that 50%. So we do not want to see this kind of keep going. So we're at a critical kind of turning point. Now, if I just scroll back up and I change this to be the S&P 500, we're in a bit of a blend of both. The S&P hasn't made new highs, but it too stalled right at this trend line to close out the day. So this is worrisome. On our 60-minute, we've started to rally, but we sure don't want to roll over right at zero. That's kind of when things really start to accelerate downward. And on the daily chart, we keep finding support at this 3,700 level, but now we're coming back up and we're testing this downsloping trend line. And if we can't hold this and we start to roll over here, that would be very worrying. So I think it's a pretty important place to keep your stops very tight. We're trying to bounce off the zero line on the daily chart. And to me, that's a pretty optimistic signal. Now on the weekly chart, again, we're still holding up around the 50-day moving average. Things are kind of okay, but we do have a sell signal. We only get one or two of these a year on the weekly chart. And we've just got this sell signal on the PPO oscillator. So it's not that positive from a perspective that we have these sell signals and now we're just trying to figure out if we can rally back. I've been doing I posted quite a bit on the Canadian Technician blog on StockCharts. I've also posted in the Chart Watchers article, but I've been talking a lot about the situation from the year 2000 and how the market broke down after some extreme situations back then. And unfortunately, currently, we're still tracking that same NASDAQ 2000 performance. So I don't want to kind of get stuck on that because I've covered it off before. All that to say, go read my article on the Canadian Technician blog from February 11th or February 12th titled Two Questions I Have. And hopefully that gives you some insight as to kind of the situation that we're sitting in that we want to try and look at. So these are the Dow 30 stocks, and I've got a chart list all made up. I'm just going to reset these. So just, I could have easily done this before the show, but I wanted to make sure people know how to do this. So if you have a chart list, and let's just say you want to adjust all the charts to a different size. So we could either pick whatever, 1400 or something. Normally I would pick 1250 wide by 750 high. When I hit update, I'm also going to just zoom in on my screen and make it a little bit bigger. And then if I pick the zoom panel on the side, that's going to use up a little bit more real estate. And let's just say I like that. So now I want to save this as Apple. And then the second thing I need to do is scroll down to the bottom and apply style to all. And that's going to change all 30 chart lists. And this is giving me a warning if I'm changing the time frame of the chart. I'm not going to do that. But it will just update everything so they all look the same with, in this case, a three-year, 2.5 year period. What is it? 2 years? Yeah, 2 years exactly, I guess. So we're going to go with this 2-year time frame. So we see Apple bouncing off the 40-week moving average and the 10-week moving average. We've got the full stochastic. Again, on a weekly chart, we'd like to see that it bounce around 50, not 20. That's a little bit low. But you can see Apple's done that once a year. And that's been a nice place to get back on board. The bounce in 2019 was in May. The bounce in 2020 was in March. Obviously, everything bounced on that one. And here we are back here again, kind of in the spring, looking to see, will Apple start to turn up? So I don't want to get too bearish because it's been seasonally weak the last couple of years at this point in time and then turned up higher. Now the real question is we have this negative divergence where the stock has basically tried to make a higher high and is rolling over. Momentum indicators still pointed south. So for a large cap tech, and obviously NASDAQ's been weaker, what we don't want to see here is all of a sudden that Apple starts to really kind of break down, especially being in the large cap tech group. So I can either flip through these charts one at a time in this form, or I can go to view all. We're going to do that because now I've set them all up so they fit my page. And then I'm going to change one more thing. I don't want to auto size the charts. And by turning that off, then I can actually annotate the chart. And if I have that feature turned on, when I try to annotate, it's turned off because I've got the auto size. So I have made everything to fit my screen now. So if I turn off this auto size, it's just going to allow me to scroll through the charts and then I can annotate them live. Okay, so we have Amgen, and Amgen's a pretty interesting stock for me, and I'll tell you why. One of the things I like to watch for is a trend break in momentum. And so we have this downtrend in momentum. And typically what I want to see is it kind of gets close to this line and then starts to turn up right here. And so after consolidating for a year, all of a sudden, if Amgen was to get fired up here, I'd probably be a little more bullish. Quite frankly, there hasn't been a reason to look at Amgen for a year and a half here. It's been pretty much nothing. So is there something about to change this momentum in the stock? Notice it's not negative. It's just not positive. When you consider how strong the stock market has been, this stock has really done nothing. So to me, it's off the radar. But one of the things I'm interested in is this momentum change. And if all of a sudden it could start to pop up, that would make me a lot more bullish. I think I have to just put the X here. Okay, so when we roll through American Express, so we've just covered Apple in technology, Amgen in healthcare. Here's American Express in finance. I mean, this chart looks good, right? It's heading up into the top right-hand corner. I see no reason that this trend can't continue. Everything looks fine. The momentum indicator here has a nice upward sloping trend. And as long as that continues, I'd probably want to stay long the stock. So this looks good to me. And I'd be, happy to hold it while it breaks out. Now, currently, that same chart is just putting in a bit of a weak candle today, considering the NASDAQ was up 4%. Why isn't this getting moved? But the NASDAQ was down hard on Monday. So here's Boeing. And again, we're into a different section of the market here. We're into aerospace. And the point I would make on Boeing is the horizontal support and resistance. We've probably seen this line, but I just want to work through these charts with you and just show you how different they all are. There's some really odd things going on here in this, I don't want to call it eclectic group of stocks, but this group of stocks is really quite unique in that they're all setting up quite differently. And then I have a momentum indicator here. It's just breaking, but I actually would expect Boeing to kind of bounce off here. So I'm going to leave this down here and just watch to see how this plays out. But I do expect Boeing to break to the upside. And I mentioned many times before that I like the full stochastic on a bull market where it bounces at 50. That's what Boeing's doing. You can see it got blocked at 50 all the way along here for the last year. Now all of a sudden it's turning up. I think that's a meaningful trend change, and I like the way the stock looks. Caterpillar. So Caterpillar's been very bullish lately and obviously riding a nice uptrend. So we were, let's call it, in around the 130 level here in June. We're up at the 230 level. That's a pretty heady gain, roughly $100. So pretty nice. Nothing on this chart is really bad other than the fact that all of a sudden this week, again, we've had a good run. The Dow is trying to break out to new all-time highs, and yet this candle is actually closing down quite a bit. And one of the things that we're seeing is the US dollar breaking out to the upside. So that puts pressure usually on commodity prices, and that might be one of the reasons we start to see pressure on Caterpillar here. So I want to see this continue. We do have a bounce off the signal line, so it gives me a place to draw my trend line on. I don't want to watch this roll over. This is really kind of a difficult spot. So again, sitting here with all of these different groups, sectors in play in the Dow, and yet as we look through the stocks, there's a couple of things we want to watch for. Here's the PPO on CRM, Salesforce.com. And what I see on this group here is this is downtrending, and if it was to bounce here, I'd get very bullish. It doesn't, usually momentum only comes back to zero on this stock and starts to turn higher. So that's what I'd be looking for. But it's really kind of surprising that, even on today's rally, 4% on the NASDAQ on Tuesday, we got nothing out of the stock. Like, it just didn't do anything. So we have Apple up at the top there, and then we have this one, and their price action actually isn't that positive considering what we just saw in the NASDAQ. So here's Cisco, and Cisco, quite frankly, has been a dog. That dog don't hunt, so to speak. And what we're watching for here, if we just draw a horizontal line, let me just grab one. Snap a horizontal line here, call it $48, somewhere in there, maybe a little bit lower. We're sitting right on this level, and we want to see, obviously, if Cisco can finally pop through and start a new trend. And what I like is this is a bull market bounce coming off the full stochastic here. Whoops, that arrow isn't what I wanted. And so we want to watch and see if we can break out here. And the PPO has finally moved above zero more than it has for a year and a half. So Cisco basically ignored the bigger part of this whole rally off the lows. And so now it would be nice to see that kind of break out and start to get going. So it's been a terrible performing stock relative to its peers, and all of a sudden it's trying to accelerate. So that would be good to see. Looking in on Chevron, so obviously the oil stocks have been doing really well. This one is accelerating up. There's no real reason to draw any major lines on here. I think if there was anything I was interested in, go for a horizontal line. If there's anything I'm interested in is this resistance level, and we're now breaking out to the upside. So let's just grab it and push it up here. Can we see Chevron get back above this prior high and start to push up? Now, crude oil is already above the 2020, I'll call it January high of 2020, and yet Chevron isn't. So can it finally get some momentum and break that out? I do think that the oil stocks are going higher, but I'm usually an oil bull. Here's Walt Disney, a big trend up. I like everything on the stock, but just much like on Amgen, where I wanted to see the PPO kind of break the big downtrend, I have the opposite problem here on Disney, where I want to see this stock keep holding this uptrend and not start to roll over. So still looks bullish to me. I don't have any reason to doubt the stock yet, but I want to make sure it keeps kind of outperforming. And if there was another, I'll call it question I have, I just don't want to I don't want to see Disney start to underperform the S&P 500. Okay. So that chart looks okay. When we look at the Dow Holdings, this is Dow Chemical, used to be called Dow Chemical. We're having a nice uptrend. PPO has just gone flat on us. Everything looks okay. There's nothing wrong here. When I look in on Goldman Sachs, this stock has been great. There's still a lot of space between the signal line and the PPO, so it's still trending higher. Nice big uptrend over here. Everything's positive. This is just good. But here's the interesting question. Up 1%. With the S&P and the Dow both having big days on Monday and then on Tuesday, just kind of pausing. This stock hasn't done much for 2 weeks, so it's really kind of a difficult quandary. I wanted to see a little bit more follow through on the breakouts. So here is Home Depot, and on Home Depot, we've got this downtrend like we've seen on a few of the others. But the one thing I want to watch for here is a bounce off the zero level and start to go. It's trying to turn up from below its 10-week and 40-week, and it needs to push through those two moving averages and get going. The only time on this chart this stock has been below those 10-week and 40-week was for the COVID low. So the real question is, after running up into August, the stock has done nothing. Can it finally start to turn up? And I will say, one of their big seasons is the summer season for construction, deck building, and outdoor patios and barbecues and blah, blah, blah. It's a great stock. I wouldn't be surprised to see it start to turn higher. And I like it as a recovery trade coming out of the COVID lows because a lot of people have saved money, and so they might be able to afford to do more in their backyards. So here is Honeywell. The stock has been trending higher in terms of momentum, and the momentum has slowed down. It's still positive, but the stock has gone sideways for the better part of, basically since the first vaccine was announced. We've made no ground here, so that's really odd. I like the fact that the full stochastic is trying to turn up around 50%. That's pretty bullish. But right now the stock is really on a hold. So I would watch this for what we call a volatility squares, where it just kind of settles down, starts to hover, and then all of a sudden takes off to the upside. We were trying to watch for that sort of thing in 2019, but it ended up the stock never did kind of break out above the levels and started to fall away. For IBM, this stock, a couple of reasons to annotate this one. And one of the things I want to see, obviously, is this PPO hold and bounce from here. That would be bullish. We also have 2 years of resistance. Can the stock finally get going to the upside? And maybe perhaps we'd set this line up more with the 2020 highs. Can it finally bust through there? That would be good. I do like the fact that the full stochastic has started to turn up. That looks pretty good. And on the scooter ranking, we're below 25, just barely, but we're sitting right here at this level. And one of the issues we've got is if the stock can finally break out from here. I like it when it goes from underperformance and then actually starts to turn up. But so far, the stock's been dead money. It really has to start showing something in order to get us really interested. Looking in on Intel. So Intel is almost like Cisco, where it's been sitting in this trading range for a while. And now we're trying to break out to new 52-week highs, very close to it. The stock has a subtle uptrend going here since December. We want to see it break out to the upside. That would be very positive. There's nothing on the chart saying it can't do that. I would say everything looks okay here. It's just one of those stocks that it really needs to pop through. And if it can start to break out, that's probably a trade I'd like to take. J&J, this one surprises me because they've just come out with their vaccine, and yet here we are rolling over, going below the 10-week moving average. We're actually making lower highs for 6 out of the last 7 weeks. Nothing great there. And then I've got this small uptrend that has actually started to break, even though they're one of the biggest vaccine suppliers and getting on a roll. So I don't know if this is just pulling back and going to start to take off to the upside, but when the vaccines first started to get introduced, this stock broke out to new highs in early December, ran up, and as the vaccine started to, I think they basically said, we're going to send it off for approval. And then at the end of February here, they get approval, and yet the stock continues to wander lower. Just a real kind of mixed picture. Can it turn around and bounce? You would think so. If I remember right, I think on Jim Cramer's show, they mentioned that they were doing the vaccine as a not-for-profit, just to try and help out the world. But the stock isn't responding very well yet, so we want to keep an eye on that. Now we go to JP Morgan, and much like Goldman Sachs, this thing's working its way higher. American Express as well. These financial stocks have been pretty good. Looking in on the stock here, it's doing okay, but again, the Dow's hitting new highs, and this stock made highs 3 weeks ago and really hasn't been able to do much since. And so far, after a pretty good 2 days to start the week, the stock is still flat on last week. So I'm wondering what the pause is all about. And then I'm looking here on this uptrend, and that still looks healthy. So I would just say, a cynic in me says, why can't it move faster? But it's still trending up. So Greg, give it a rest. Coca Cola stock hasn't done anything for 2 years, trying to hold the 40-week moving average. Maybe a bounce off the zero level here can start to get it going. But there's nothing on this chart that makes me want to get it. Like, I don't have any sort of momentum trend change looking on the PPO. There's a slight higher low here, but, there's just nothing really making this chart look investable to me. So it's probably one I would avoid. McDonald's has gone into a lull, just gently trending down. And on this here, again, there's nothing wrong. It's just kind of consolidating after breaking out. But you would think, after they start to announce that the economy's opening and all that kind of stuff, this stock would get a little bit more momentum to the upside. So I want to watch to start to see that downtrend break. And if that would happen, that's probably a nice entry. And I wouldn't mind it because you're starting to get this PPO coming back to zero to reset, bouncing off the 40-week. And I want to see my full stochastic make a higher low here. Get rid of that other arrow. So making a higher low, that would look pretty good. Okay, and working through 3M, the chart's just been gently trending up. It's not doing anything, and you can see it's underperformed the S&P 500 for 2 years. So is there a reason to really want to own it when this is kind of, continually just gently underperforms the S&P 500? And when we look horizontally, Is it finally going to start to do something here? It broke out for a week, it came back in, and it's just trending along this line. Doesn't seem to have any inertia or momentum to kind of kick it up and go higher. So once again, a little bit disappointing, and not really a stock that looks like something is getting ready to cook. Let's put it that way. Okay, Merck, I would say, it's at support at $72. That's probably something worth looking at, but still nothing really great, right? Scooter rankings underperforming, S&P's underperforming, PPO below zero, nothing really good there. Microsoft has been trending higher, trying to bounce right here, but we have a higher high in price and a lower high on the momentum indicator. And the one thing I don't want to see on this particular chart is I don't want to see this break down and start to break below this low. So this is an area of concern for me until the stock starts to get more positive momentum. For Nike, it's a retail name. It's rolling over a little bit. I think with all of the disposable income that people have, this chart could probably turn up. But right now, I basically need to see it start to outperform and stop underperforming the S&P 500. It's been underperforming since the beginning of the year. Procter & Gamble, I don't like anything about this chart. It's rolling down. All my indicators are pointing down, and there's really no power showing up there. Insurance has done well, and as the interest rate has been increasing, that helps insurance companies, so we're starting to see this trend up. Most of the indicators are trending up, so I like the stock. I would just say we're starting to get a PPO. It hasn't crossed yet, you can see on the Zoom panel, but it's starting to look a little bit close there. United Health, again, big downtrend in underperformance compared to its peers, underperforming the S&P 500. It has tried to bounce here off the 40-week moving average, but there's no real reason to own this, and we're making a lower low on the PPO in terms of momentum, so once again, a little bit weak. Now here's Visa, and I like Visa for a couple of reasons. One is, as people start shopping again when the economy opens, this looks like it's ready to start to break out to a new high. I don't have anything really going on the PPO momentum, but if this is going to start to break out above this trend line, I'd like that. That would be very positive for me. And I do like the fact that the PPO is starting to make higher lows and now kicking into higher highs. That's pretty good. Or sorry, not the PPO, the scooter ranking. And lastly, I'd like to see it start to break this downtrend relative to the S&P 500. And when it did that, I'd probably want to get on board. Verizon, this looks uninvestable. There's really nothing going on there. Walgreens, it's been a terrible performing stock. It's actually started to rally recently, and it's a bit of a bull flag. So if that could start to break out to the upside, I'd get a little bit more excited. Not a lot more because the stock hasn't done much, but at least it's finally started to break the downtrend. And you can see in early January here, it started to break above this $45 level. And lastly, I think is Walmart. And what we see on the Walmart chart is the PPO is right down at zero. I think with all of the 1.9 trillion, Walmart's going to get a whole bunch more checks for people who need some help fiscally. And if that's going to happen, this is probably the place where we'd look for the chart right down here around zero on the momentum indicator to start to turn higher. But so far, everything is trending out of town, and I'd have to wait for that to improve. So what I see when I look across these charts is a real mixed bag, and quite frankly, not a lot of good things showing up. There's a couple of charts. Visa is one that comes to mind that is starting to trend the right direction. So anyway, it's a mixed bag. We want to make sure that those downtrends I talked about right at the beginning start to get broken. So with that, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern Time. You can also see the recordings on StockCharts TV YouTube page. Thanks, everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.